Hello, everyone, and welcome to another market update. Today is Thursday, the 30th of April, and we continue to see the volatility in the oil market. Just when you thought everything was calming down, it's fired back up again. So we'll talk about that today. But the top three things are going to be interest rates, followed by inflation, and then oil. And I'll touch on earnings and a few other things as well. Rates and inflation tend to be two of the top things that I talk about because there's so much going on in that space right now. So let's talk about rates. The US Fed overnight chose to leave interest rates on hold, interestingly enough, despite the fact that inflation has been ticking to the upside in the US. And I think the April figures, when they get released, are going to show probably a pretty significant acceleration in inflation in the US, which is going to be problematic for the Fed and will, I would have to think, trigger them to put interest rates up at the next Fed meeting. There is some discussion at the Fed that they should be doing a rate cut, which I really don't understand how they possibly think that would be a good idea, given that inflation does seem to be trending up and not down. So I think that's just something we'll have to continue to monitor and see what the Fed does. Australia is probably a different story. We had a pretty bad inflation print. I had to laugh when I saw the inflation print. I actually picked it up off of the CNBC website initially, where there was an article. It's not here anymore. It's probably well and truly gone. But it said something like, inflation in Australia was lower than expected. And I thought, oh, that's interesting headline. Let's look at this article. And of course, it said the expected inflation rate was something like 4.6 or whatever. That's what economists or whoever gets polled for these things thought that inflation was going to do. And it came in at 4.2 instead. So it's like, oh, phew, oh, only 4.2, 0.6, nothing to see here, all clear. Well, of course, that is ridiculous. And I don't know what's happened to my camera, but it has just decided to stop. But I will keep talking. I think everyone knows what it looked like anyway. I hope the screen is still working though. I guess I'll find out in a minute when I turn the thing off. But in any case, I had to laugh at that headline, and it is really not a good situation at all for Australia. Inflation continues to move up. This oil situation is certainly not going to abate anytime soon, it doesn't look like, and so we're going to continue to see inflation being problematic in Australia. I would have to think that the RBA, we have an RBA meeting next week on Tuesday. I would have to think that we're going to see them put rates up. The question probably on the minds of interest rate pundits will it be a 25 basis point increase or potentially a 50 basis point increase? I would have to think that they will probably just go 25. They don't want to hit it too hard, but who knows? Either way, the point is that inflation continues to be a problem that they will have to continue to address. And I just think it means that we're going to have a higher rate regime for longer. Most interest rates across the curve have adjusted already. They've been going up. Many of you who are also our mortgage clients would have been contacted by Darren recently to review interest rates and to if you weren't already on a fixed rate, to offer you the opportunity to go into a fixed rate. Unfortunately, that ship has now sailed. All of the rates across the curve, really, we were just looking at the 1, 2, or 3 year interest rates. They've all moved up by 25 to 50 basis points, and I think in some cases maybe a little bit more. But the window has closed on that, unfortunately. So you'd have to be worried about rates now going even higher to, I think, even consider fixing. So you just have to tough it out on your variable rates until we get into a cutting cycle, which who knows? Higher interest rates will probably precipitate some form of negative growth situation in Australia, but not, I would say, until the end of the year or maybe early next year. So anyway, but we'll just continue to watch the data, obviously, on that and make commentary about it. But for now, rates up, inflation up, and cost of living up, and disposable income down. not a great recipe for growth. Having said that, we are seeing the price of oil going up, which of course is interesting because we had the price of oil come down a lot well, not, I shouldn't say a lot, but come down because it looked like we were going to get a peace deal or some sort of deal with Iran, but it seems like that is not currently happening, and we've seen a massive spike in the price of Brent as well as West Texas crude in the last 24 hours. I think West Texas went up, let's see here, closed at 150. Well, I don't think that's quite right, but in any case, it closed the prior day on the 28th at about 140, and it's up $10, basically $10 a barrel. That's U.S. West Texas and actually, sorry, that's not the contract. That's the ETF. What did Brent do? Sorry, this is crude. Yeah, crude hopped up quite substantially, closed at 106, and even that doesn't seem right. In any case, it's going up. That's all you need to know. The metals are also responding now, interestingly enough, which gold and silver getting a nice bit of a spike there as well. So where does this leave us, I suppose, with market? Oh, oil. I was talking about oil. So again, I don't need to really rehash much of this. You know how the story goes. Oil is an input into everything and into the cost of everything. And a higher price of oil is going to mean higher price of food, higher price of pretty much anything that gets moved around, which is pretty much everything. So you would think that we will start to see some of that cost push inflation coming through the market. I'm sure that some suppliers and other retailers and stuff will maybe absorb some of the costs initially, but if it's sustained, you'd have to think that they'd be passing on costs to the consumer. So I was going to comment also on corporate earnings. So rates, inflation, oil, all sort of part of the same issue and pattern, which is they are related, that is to say. The good news, I suppose, in all of this is that corporate earnings are rising, and we have had some good corporate earnings reports. We're also going to have some bad ones, but we've had some good corporate earnings reports. And overnight, Google and Amazon reported earnings and reported good earnings. And I probably have guided higher as well because both stocks had a nice little bump to the upside, which is great. Because you own this stuff in your portfolio, not directly, but through ETFs. A lot of ETFs that are tech focused have, well, all of these names, Apple, Amazon, Google, Nvidia, Broadcom, Meta, etc., are all owned in a lot of the growth factor ETFs. So where does that leave us with the market? Well, we still have quad 2 and 1, 2s and 1s coming up on a monthly basis, so that's a good thing. The U.S. economy is actually doing okay at the moment. It isn't in recession and not really heading that direction. And corporate earnings, as I just mentioned, are also doing pretty well. So that should be a little bit of a tailwind, but obviously the inflation piece is something that could eventually be disruptive to this market and cause some sort of correction or downturn. But for now, it is growth exposures on and piling into that sort of stuff. So portfolios have been adjusted slightly in the last week or two to get a bit more of that growth exposure on. I'm just looking for a screen. Here we go. That I just wanted to talk quickly about the technology. So this is the NASDAQ chart of the NASDAQ. As you can see, it's broken out pretty massively and had quite a run. I think we're still hitting new all-time highs in the NASDAQ and the SPY, which is the S&P 500. Again, we've got Google, Amazon. These are just charts of the two here that are doing quite well. Meta is an interesting one. I did not look into their earnings report, but their stock price did get clocked overnight, so I'm guessing they reported some earnings that weren't great. One of the laggards continues to be Microsoft because I think the software sector is under a bit of pressure with AI and all of that. I'm sure Microsoft will probably survive all of that, but not without having its stock price clipped a little bit. It does seem to be sort of in a downtrend. If you just look at this chart, it does look like it's heading down, although the last month or so has been constructive in that front. So we'll just have to kind of wait and see there. One thing I did want to point out about something that I haven't talked about in a little while is the correlation table. One of the key correlations is the US dollar to everything else. And the dollar currently is in a bit of a downtrend. And I have mentioned and talked about the correlation table before, but just as a refresh, things will have negative or positive correlations to each other. And one of the key ones we look at again is the US dollar to things like gold, to Bitcoin, to oil, to the S&P 500. And I'll just draw your attention, 30 days ago, there was a pretty strong negative correlation to both the S&P 500 and to Bitcoin, and to gold, I suppose, as well. It had a pretty decent negative correlation, which means that when the dollar goes down, those things go up, and when the dollar goes up, those things go down. So here's a little trick that you might, or a lesson, I suppose, but here's a little trick that you might um, uh, play on yourself, which is if we get a down day in markets, go and see what the US dollar was doing versus other currencies. So the way to do that and express that is to look at the US dollar index. You can go to a website like CNBC and you just click on something like US markets here, and you just go down to the currencies, and the ICE US dollar index is what I'm referring to, and just see what that's doing. If it's gone up, and now you wouldn't have the correlation table, but as you can see here, I've just shown you that over the last 30 days it's been quite negative, but now it's actually not. So it's lost a lot of that correlation, where it's almost back to neutral correlation. Bitcoin the same. So Bitcoin had a real negative correlation, which is one of the reasons why we probably saw Bitcoin get a nice bit of a bid, and that's kind of faded out of the market. Now, can this change? Of course it can, and it does. As you can see, over longer periods of time, these correlations have different metrics. Probably the 30-day, the 15-day are the key areas that we want to look at there. But in any case, that is something from a global macro point of view to look at, is what is the dollar doing? If the dollar is going up, that's probably bad for a number of things. And if it's going down, that's good for a number of things. I know that's a little bit generic and broad, but hopefully you can see if you look at what's the dollar doing, and then you look at something like gold, for example, say gold was down because the dollar was up and there's a strong correlation to it, that would help you to rationalize and understand what's going on in the market. So just a little bit of a lesson there, I suppose, on what's going on. The other thing we do with this, of course, is in the context of what is the dollar doing? Well, the dollar's in a bearish setup at the moment. The dollar is being devalued. And what that will also be a tailwind for is things like the tech and the growth stocks and so forth. So a cheaper dollar is usually good for certain sectors. But there's always lots of things at play in all of this, and I don't want to oversimplify it because it is much more complex than that. But these are some of the high level and key things for you as someone who may or may not be paying attention to markets, but let's say you are, to pay attention to. So there you go. Now, one of the other things, of course, that we pay a lot of attention to is volatility, and this one is definitely an area that we keep our eye on. And the interesting thing about volatility right now, this is the VIX, so the S&P 500, is it has come down quite a bit, and it's very much still now in the investable bucket, which is good. And so the way we approach this is if we see volatility spikes, and those usually will, if volatility is spiking, that is often correlated to a down day in the markets. Given that we are in the investable bucket, what we want to do is use that to our advantage and say, okay, great, volatility's up. Are we still in a bull market in certain things? Yes, let's go and take advantage of that and buy those things. So another thing that you might do is look at, if you see some trades that have come through on the account or something like that, is to look at what was going on in the market that day. Was volatility up? Was it down? And how did that impact a certain thing? Like, for example, VGT is the ticker that is owned in many portfolios. That's the Vanguard Technology ETF. It's got about 300 stocks in it, and it very much is related to not just the S&P 500 volatility, but also the NASDAQ volatility measure. Now, NASDAQ vol has a different level. The uninvestable bucket is a little bit higher. So right now we're kind of in the chop bucket around that 20 to 23. But when volatility in the NASDAQ goes even lower, below 20, that's well and truly the investable bucket. We're probably just a little bit in the chop bucket, I suppose would be the best way to put NASDAQ volatility. Uh, but again, it's a situation where if volatility has moved higher because we are in that bull market in technology, that would be a buying opportunity. So again, not trying to be overly cute, and it is oversimplifying the very complex, but those are some of the things that I'm looking at and some of the things that I do when I consider how to shift the portfolios and manage those. That's about all I need to say. I want to keep it short, well under 20 minutes today. Really just wanted to point out the oil situation seems to have kind of gone off again. That's going to obviously have some flow-on effects to the energy complex, and we'll just have to see what happens over the course of the next couple of days and how the markets react. Right now, the Aussie market isn't down too much. It's closed down about 30 basis points, so um, 0.3%. Or lower, so that's good. The market's probably kind of yawned at the stuff that's going on in the Middle East. So, but again, we'll just have to wait and watch and see what it does. All right, I think that's all I really need to say today. I still don't know if my camera has stopped working or what's happened there, but in any case, have a fantastic weekend. Having just enjoyed another short week, and I will leave more if needed this week. Unlikely, but next week, obviously, we'll see what happens over the weekend with Iran and whether the U.S. chooses to drop any more bombs on them or whether they maybe work out a peace deal. You never know. All right, with that, have a fantastic weekend. Take care, and I will come back again next week with a further update. Cheers, everyone. Bye.